So far this year, crypto has been bonkers. We've seen the approval of US spot ETFs, price volatility in every direction, and politicians paying more attention to Bitcoin than ever before. And it ain't over yet. So, what comes next? Well, a market forecast for August might just have the answers. So today, we'll break this report down for you, offer our own insights, and tell you what to look out for in the coming months. The report we'll be summarizing today is titled August 2024 Crypto Market Forecast. It was recently published by Forbes, and we'll leave a link to the report in the description if you want to check it out. Now, it starts by looking at July's performance, and it's safe to say that it was a busy month for crypto. First, the SEC finally approved the launch of 9 spot Ethereum ETFs. And while this was bullish AF for ETH holders, ETH's price didn't really respond in the way people had hoped. Those US spot Ethereum ETFs started trading on the 23rd of July, and at the time of shooting, ETH's price is down by around 20%. Now, this is likely the combination of 2 factors. The first is that it was a bit of a sell the news event, and the second was Grayscale. For reference, the Grayscale Ethereum Trust experienced extreme outflows in the first few days of trading, pushing down ETH's price in a big way. It's likely that this also caused additional panic selling, not to mention the liquidation of traders who'd gone long. Meanwhile, BTC's price gained momentum in July, in large part due to the US elections, or more specifically because of former President Donald Trump, who has flipped massively pro-Bitcoin during his re-election campaign. More on that later. The report then mentions that BTC's price dipped to a 4-month low of around 54k in July, but has been trending higher since, closing the month at around 67k. Obviously, things have been a little bit crazy since then, as BTC's price took a brief nosedive below 50k, taking the rest of the crypto market down with it, before making a rather impressive recovery. Topic for another video. Anyway, the report then continues by pointing out the performance of various altcoins. ETH's price dropped by 3.4% in July, closing the month at around $3,200. And of the top 10 cryptos out there, XRP came out as July's top performer, having gained 27%. Meanwhile, TON is named as July's worst performer, although it's up by more than 21% in the last 3 months. We happen to think that TONcoin will be one of the best performing cryptos this cycle, and you can learn more about why that is by checking out our recent TON update. We'll leave a link to that video in the description for your viewing pleasure. Anywho, the report then mentions that BTC is on track to have its 2nd consecutive year of positive price action, having gained 61% since the start of 2024. The same applies to ETH, which has gained 42% since the start of the year. In fact, things are looking pretty good across the board. It's mentioned that crypto's total market cap peaked in November 2021 at $2.9 trillion before the bear market sank its claws in. It has since recovered quite nicely and is back to well above $2 trillion, even after the recent volatility. Crypto is healing. And by the way, if you're enjoying the video so far, give it a boost by smashing that like button. Subscribe to the channel if you haven't done so already, and don't forget to ping that notification bell so you don't miss our next video.
Are you ready for deals? Are you ready for trading fee discounts? Are you ready to save some money? If the answer is yes, then you're ready for the Coin Bureau Deals page. Yes, Coin Bureau brings you the very best deals and promotions in all of crypto. You won't find offers like these anywhere else. Discounts on the best hardware wallets! Exchange sign-up bonuses of up to $100,000! Trading fee discounts of up to 70%! Coin Bureau's brand new altcoin-focused subscription service! The Coin Bureau Deals page is even better for you than this piece of succulent, protein-rich, nutritious grilled chicken! Head on over to coinbureau.com/deals or click the link in the description below. Don't delay. Check out the Coin Bureau Deals page today. These deals are so hot, I need to cool down. Yeah!
Now, the next part of the report looks closer at the performance of the spot Ethereum ETFs, which were approved roughly 6 months after the spot Bitcoin ETFs. It points out that investors have actually had access to SEC-approved Ethereum futures ETFs since October last year. The difference is that spot ETFs invest in crypto assets rather than in crypto derivatives contracts. To be frank, the Ethereum futures ETFs have been underwhelming, to say the least. Anyway, the report lists all 9 spot Ethereum ETFs and for some reason includes ARK Invest 21 Shares Bitcoin ETF in that list, before highlighting that, quote, as of July 26th, BlackRock's ETH-A ETF has led the group with $354.8 million in net inflows, followed by Bitwise's ETH-W fund with $249.9 million and Fidelity's FETH fund with $180.1 million. Julio Bedolla, a wealth manager at Lord Murray, said that spot crypto ETFs have given institutional investors a way to dip their toes into crypto for the first time. That's because the spot ETFs have the advantage of simple and indirect exposure to crypto without the need to set up wallets or remember seed phrases, and also have clear regulatory frameworks. Of course, the downsides to ETFs are that you pay more in fees compared to crypto exchanges, and unlike crypto, they're not open for trading 24/7. You also don't actually own the assets in question, and you're relying on the strategies of the asset managers handling your funds, but, well, I digress. Anyways, Julio also points out that ETFs have helped to legitimize crypto as an asset class, namely Bitcoin and Ethereum, and are expected to bring in a ton of money. In fact, a report from Bernstein suggests that Bitcoin and Ethereum ETFs are expected to grow to $450 billion. Kavita Gupta, founder and partner at Delta Blockchain Fund, said that the launch of the new spot Ethereum ETFs could also have major implications for altcoins, so much so that they could even be the start of the altcoin season we're all so desperately waiting for. In her words, quote, the launch of the ETH ETFs have been a major development for the space and will kickstart the next altcoin rally, despite the Bitcoin dominance we've seen thus far. She continues by saying that, quote, major traditional finance players are showing interest in launching Solana ETFs, signaling growing institutional recognition of altcoins beyond Ethereum and Bitcoin. Now, as much as the approval of spot Solana ETFs would be rocket fuel for the broader altcoin market, we happen to think that this isn't as likely as many people might think. This is something that we discussed in a recent video, and we'll leave a link in the description for you to check it out. The TLDR, though, is that Solana is one of the cryptos that the SEC named as a security in its ongoing cases against Binance and Coinbase. And, unlike BTC and ETH, there's no presence of a CME-regulated futures market for SOL, which has been a precursor to spot ETFs in the past. Unfortunately, this means that even if we suddenly see a CME-regulated futures Solana ETF contract, it could be years before we see a spot Solana ETF, assuming that crypto regulation doesn't change. Having said that, though, asset managers are still trying to go for gold with more altcoin ETFs. All eyes are on VanEck, which has also applied for a spot Solana ETF. And not only that, but Brazil has just approved the first spot Solana ETF, which could have a knock-on effect in the United States, particularly if it wants to stay competitive. But despite the recent approval of the spot Bitcoin and Ethereum ETFs, Gary Gensler has stayed true to form, continuing to urge caution to anyone investing in crypto. In his words, quote, while we approved the listing and trading of certain spot Bitcoin exchange-traded product shares today, we did not approve or endorse Bitcoin. Say, I wonder what's going through Gary's mind right now. He must know that his days could be numbered. As you'll probably know, Trump has vowed, twice, to fire Gary on day one if he gets re-elected, but things could change regardless of the November election result. Kamala Harris, Joe Biden's overnight replacement, could make adjustments if she were to become the next president. While she can't fire Gary without cause, she can demote him and promote someone else in his place. It's unlikely to happen, but, well, here's hoping. Now, the next part of the report looks at the grayscale outflows that we mentioned earlier. It points out that while hundreds of millions of dollars flowed into several new Ethereum ETFs, Grayscale's Ethereum Trust actually experienced around $1.2 billion of outflows in its first days of trading. Grayscale experienced a similar thing in January with its Bitcoin Trust, with GBTC seeing more than $5.6 billion of outflows by the end of the month. According to the report, the Grayscale Ethereum Trust, or ETH, held about 2.9 million ETH prior to its uplisting from the OTC market to the New York Stock Exchange in July, which was worth around $10 billion. Obviously, losing $1.2 billion in just a few days of outflows is a massive hit. The report notes that the net outflows from the ETH fund continue to weigh on ETH's price and draw comparisons to Grayscale's GBTC fund, which has lost around 50% of its BTC in the first few months of trading, suggesting that Grayscale's Ethereum Trust could also see some heavy outflows in August. Let's just hope they aren't as severe. Okay, the next part of the report looks at the upcoming November election in the US, which it says will be one of the biggest catalysts of the next 4 months. It starts by saying that less than a week after the assassination attempt on Trump on the 13th of July, Biden declared that he wouldn't be seeking re-election. This wasn't all that surprising given Biden's cognitive decline, and now that Kamala Harris is running in Biden's place, this has raised questions on crypto's future in the US if the election was to go in her favor. That's simply because, while the Biden administration has overseen various crackdowns and has generally been extremely negative about the industry, Harris hasn't really been very vocal about her views. Meanwhile, Trump has noticed that there are millions of crypto users out there with nobody to rely on and has been taking full advantage of that opportunity. So much so that he even attended this year's Bitcoin conference in Nashville, where he made a whole heap of crypto-friendly promises. These included supporting Bitcoin mining in the US by producing double the amount of electricity, shutting down Operation Choke Point 2.0, preventing the creation of a digital dollar CBDC, and commuting Ross Ulbricht's sentence to time served. But, most importantly, Trump assured the conference that he would make sure that the US government would never sell any of its BTC holdings, and on day one he would fire Gary Gensler, which was met with rapturous applause. Now, this marks a departure from Trump's previous crypto skepticism. In a 2021 interview, he said that crypto, quote, seems like a scam, and back in 2019, when his Twitter shitposting was at an all-time high, he tweeted that, quote, I am not a fan of Bitcoin and other cryptocurrencies which are not money and whose value is highly volatile and based on thin air. But then, he also released his own NFT collection in December 2022 and, according to Arkham, also owns more than $3 million in crypto, the vast majority of which is in ETH. So hey, I guess he's come to his senses. Anyway, it's noted that this year's Bitcoin conference organizers were apparently in talks with Kamala Harris to appear, but she chose not to. But to be fair, without a clear stance on crypto, it probably wouldn't have been a smart move to simply turn up, especially when she's inheriting the Biden administration's approach, which has focused less on supporting the industry and more on consumer protection and, ironically, industry transparency. If only the SEC could be as transparent about the rules, eh? Nevertheless, crypto investors are hopeful that Harris's younger age and connections in her tech-friendly home of California will make her more open to supporting digital assets. The report then notes that, quote, VanEck's digital asset research team reportedly sees Harris as potentially more bullish for Bitcoin and Trump as more bullish for Ethereum. Now, this makes sense to a degree because, as VanEck apparently says, Trump is more likely to reverse the anti-proof-of-stake policies that have been negatively impacting Ethereum for so long, prompting Gary to make that god-awful video.
That's S-T-A-K-E, not S-T-E-A-K.
But it's not exactly clear why VanEck believes that Harris would supposedly be more bullish for Bitcoin, given her lack of a clear stance. Meanwhile, Peter Eberl, the chief investment officer at Castle Funds, says that most investors believe Harris would take a more hostile approach compared to Trump and his VP selection, J.D. Vance, who is likewise very pro-crypto. For reference, Vance was a favorable choice for many leaders in the crypto space, given his previous crypto efforts. In February, he he wrote to Gary Gensler about his concerns around SEC enforcement misconduct, and in June he drafted a bill that would revamp how the US regulates digital assets, which would be even more crypto-friendly than a bill that the House already passed. Anyway, the final part of the report highlights that BTC survived sell pressure from two major events. The first was the German government offloading around 50,000 BTC, worth around $3 billion. This is something we covered in a recent video, and you can find out more about which other governments have massive BTC stacks by using the link in the description. Anyway, the second major event was the repayment of Mt. Gox creditors, who were owed around $9 billion in BTC after the exchange infamously collapsed back in 2014. These assets were sent to creditors via exchanges like Kraken and Bitstamp, and were worth around 100x more than what those creditors would have paid back in the day. Naturally, people were worried that this would crash BTC's price, but so far there's been little evidence of selling from Mt. Gox creditors. Forced hodling for 10 years will probably do that to you, I suppose. Anyway, the report then closes by discussing a report from TRM Labs, which is a blockchain intelligence firm. TRM found that hackers stole around $1.38 billion of crypto in the first half of 2024, more than double the $657 million stolen in the first half of 2023. According to the report, the most common hacks were smart contract exploits and flash loan attacks. What's crazy is that, according to the TRM report, 70% of that $1.38 billion was stolen across just 5 attacks, which would work out to an average of around $193 million per steal. And the largest attack was for more than $300 million in BTC from a Japanese exchange, and its cause is apparently still unknown. And with that, we've reached the end of this report. So, what comes next? Well, after crypto recently plummeted following the unwind of the Japanese yen carry trade, the good news is that it looks like the bottom might be in. In fact, we could be about to see one of crypto's greatest gifts, altcoin season. That's because of two important factors. First, Bitcoin dominance is around 60%, similar to levels seen back in 2020. Put simply, we could be approaching a peak. What this means is that capital will likely start to rotate away from Bitcoin and into altcoins. To be clear, BTC will likely continue to rally, but altcoins could begin to outperform in percentage terms. This is further backed up by the Others chart, which appears to be painting a double bottom. In case you weren't sure, the Others chart takes the market cap of every cryptocurrency out there, excluding the top 10 by market cap. Now, if both these patterns are to reverse, this would mean that alts could go parabolic. Until then, we can expect increased volatility as the ETFs continue to do their thing. And if we see any additional ETFs being introduced for other altcoins, well, it's likely that this will speed up altcoin season big time. On top of this, the US elections could prove to be super bullish for the markets, particularly if pro-crypto candidates take office. Of course, it could just as well be a sell the news event, so keep that in mind too. But considering that crypto is in dire need of clear regulation in the United States, it's safe to say that this bullish momentum would continue for some time. Until then, folks, strap on in. It's going to be a wild ride, and we can't wait to experience it with you. And that's all for today. You know what to do now, though. Like, subscribe, ping the notification bell, and share this video with others like the generous souls that you are. Thank you for watching, and I'll see you again soon. This is Guy, signing off.